We've also got protests in Brazil, and in fact, last night they saw their largest and most violent night yet. More than 1 million people pouring into cities across the country. The protest claiming its first fatality, actually. An 18-year-old was killed when a vehicle accelerated into a crowd. The movement spurred by demands for better public services. It was triggered, the catalyst was really this bus fare hike, but we're told by our reporters in Brazil, big themes are the World Cup spending and the Olympic spending and the fact that it's not reaching the people, and we see it in the economic numbers. Growth in Brazil is slower than forecast, it's slower than we've been accustomed to, and inflation, those higher prices, rising faster than predicted, and that is a bad recipe.
And you really want to think about going into the weekend, as we saw in Istanbul. There seems to be this sequence of protests. The New York Times talks about protests thundering across Brazil. You wonder about the depth of this away from the big cities.
And you have this unrest, Julia Coronado, on one hand, and on the other hand, the Fed is just exacerbating it with the market carnage. Emerging markets are directly in the firing line.
Exactly. It's terrible. I was actually at our offices in Brazil just a few weeks ago, and it's a really bleak outlook for them. They've got a lot, as you say, a lot of inflation, very little growth, and now the Fed's reduction of easing really has led to a run on their currency, an outflow from their markets, and it's very hard to stabilize.
Every viewer in America then wants to know, Julia, with that analysis, do we couple these emerging market tensions back to market performance in the United States? Can we do that?
Yeah, I mean, I think we are all tied together ultimately. I mean, the U.S. and in particular the U.S. stock market has been sort of a safe haven over the last month. Can that last if investors really become risk averse?